Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate income. My name is Matt, and today we locked in $2,235, and the title of the video is, was the premium worth it? I'll dive into the details of the trades that I executed to generate that kind of money, the cash secured puts, the covered calls, when we head over to the spreadsheet section. And then we're going to take a high level overview of the last 168 trading days. We're going to see my progress since transferring over from high income ETFs to my own trading. You guys will be the judge if it's been a good transfer. I think it has, maybe a little biased. And then lastly, I'm going to talk about the trades I plan on executing for December 11th. So let's get the ball rolling. For any of the new viewers that are watching, the first thing I like to talk about on my channel is my Robinhood portfolio value, because I take this number, plug it into my spreadsheets, and I come up with percentages and averages. So just so that you guys know what I'm referencing, here it is. Count is at $232,443.52 during the trading day. Was up about 0.6%, so up 1,400. But over the nighttime, I lost 1,400. So pretty much net even for the day. Yeah, let's head over to the spreadsheet and we'll talk about the trading. December 10th, everybody. Let's dive into the trades I executed. Ran one covered call on the SPY, and then 4 cash secured puts, 1 on the SPY, and then 3 on Oracle. For the first option that I ran was the SPY covered call. My buying point was the 685. And for anybody that is a new viewer to my channel, I like to treat every 100 shares I own as an individual style of money. And it's highly important and very important about my buying point, because one of my biggest harvesting rules is never sell below your buying point. And let's look at what that means. So today, SPY opened at the 682.43, and as you can see, that is below my buying point. So if I chose a strike price that was close to 682, I would be realizing some money if it happened to get assigned. So what did I do? I just chose a strike price at the 685, which was at my buying point, locked $100 of premium. I didn't do any type of technical analysis to figure out I needed to choose a strike price at the 685 because my buying point was 685. There was no technical analysis done. It's just read and react to the market. Market's down. My buying point 685. Choose a strike price at your buying point. You won't lose money. I locked in $100 of premium up front. Pretty happy about that. SPY closed at the 687.50. That means my option actually got assigned away, but it got assigned in my favor. It closed at the 687.50, but right now it is trading at like the 681, 682. So when I head over to Robinhood, I'm actually going to purchase 100 shares of SPY so I can run it as a covered call tomorrow morning. And I'm going to explain why when I head to Robinhood. Next option I ran was a cash secured put on SPY, had some collateral available to borrow against my account. Same story with the trade at the open and the close. I chose a strike price of the 678, made $100 of premium. SPY was nowhere near the 678, so that expired worthless. Made $100. All I had to do was basically borrow against my account. Nothing got assigned. Easiest $100 you're ever going to make, guys. Now, the money printer cash secured puts. I ran 3 cash secured puts on Oracle, and let's dive into the details. Today, Oracle opened at the 221.88 and closed at the 223.28. This was right before earnings, and everything was in an optimistic direction. But then once earnings happened, investors did not like how much debt Oracle was using to fund their AI push. Their earnings seemed fine. They missed revenue by a little bit, but then all of their other metrics. Oracle had $523 billion of remaining performance obligations. And what does this mean? It's the total value of contracted future revenue that a company has. So especially for cloud providers and infrastructure as a service like Google, Oracle, Microsoft, Amazon, they are going to have a lot of these type of RPO assignment, but Oracle has a ton of money on the books ready to get paid. They just need to have the capacity to have the customers on there. So let's look into what happened. So market did not like it, went down. I think it's trading at like 197, 195 right now, but we'll head over to Robinhood. We'll take a look at some of those numbers in a minute here. But the first thing I did is I chose a strike price of the 220. Market was at the 221.88. And I'm like, you know what? Let me just rip a nice $1,100 premium. So it felt really good at the time, but then in hindsight, you're like, man, maybe I should have done one less option on Oracle, but made $1,160 off of that premium. And at the end of the day, I haven't realized any loss because how am I going to play this? Even though the Oracle went down a little bit, I'm just going to hold on to the shares and run covered calls until eventually the Oracle stock goes back up and their RPO is actually starting to make money for the company, and then the stock will go up and then life will be fine. So there really isn't a big deal. This isn't like a monumental, like, oh, wow, you should have not bet on earnings. Guys, it doesn't matter. Oracle's a good stock. They're going to make money, and I'm going to make money running covered calls on them. No problemo. For the second cash secured put I ran on Oracle, chose the 207.50 strike price, bagged $588 of premium. And then lastly, the final cash secured put I ran on Oracle was a strike price of the 197.5, made $287 of premium. And in total, guys, that's how I made $2,235. I would say 90% of it was Oracle, and the rest was my normal SPY covered calls and cash secured puts. Cool. So let's head over to the other side of the spreadsheet and talk about the project as a whole. All right, guys, I'm going to rip through this section. For December 10th, we've already mentioned $2,235 of premium. And if we look at the my account value, we saw somewhere around $232,000. That fluctuates, so that number doesn't really bother me. But we are tracking to see if it's going up. And over the last 8 months, it's been going up. We have locked in about $82,370 of premium in those 8 months of trading. And then that's about a return of 52.33%. The change in value from the last day was about negative 0.34%. And let's talk about our trade win percentage. Whenever I look at the trade win percentage, 3 words come to mind: predictability, probability, and consistency. I traded it for 168 trading days in a row. I'm winning at 98.81% of my trades, 166 winning days, 2 losing days. 2 losing days were chalked up to investor inexperience, failure to roll an option properly, and then also I work a full-time job and I couldn't trade in front of the chart. So now I created some harvester rules so that can help me to prevent mistakes in the future. Looking at my average premium per day, I am generating it's about $490. If you look at that as an average weekly premium, about $2,288. And if you look at that as the average monthly premium, $9,206. For 2025, wasn't going to trade for a full calendar year running or selling options, covered calls, cash secured puts. So I decided to project out some earnings. So I took the average weekly premium, multiplied it by 52 because there's 52 weeks in a year. We came up with $118,979. That's based off of my initial, The average yearly percentage is based off of my initial investment. That was about $152,000. That was some money from 2024, and then me also putting in money. So based off a $152,000 investment, that would be about a 78% return on investment. Guys, that is better than any type of ETF or hedge fund out there. So we're definitely doing a little bit of outperforming, and that's not necessarily what I'm trying to get across here. My the main thing I'm trying to get across is the income portion, that there's another way to generate money instead of just buy, hold, wait 30 years. You can buy good investments, pretty much hold them, and then just run options against them to generate more income. Why would you not do that? It just makes too much sense. Heading over to the weekly tracker for this week, scrolling up. For this week, we have locked in $4,709. Man, we are 14 weeks in a row hitting the 4-digit club, $1,000 or more. I'm pretty excited about that. And I'm deciding what my goals for 2026 should be. But man, these last 14 weeks of trading have been quite amazing, with just 4 digits or higher. And it seems like these weekly trades are just getting better and better. Looking at the monthly tracker for December, we still have 3 weeks of trading left, but we've already hit $8,730. Guys, we are well on our way to hitting the 5-digit month. 5 digits means $10,000 or more. We're literally like $1,300 away. And we have 3 weeks left. I'm fairly confident we can hit that. And then for the yearly tracker, we have already mentioned it, $82,370. Cool. Let's head over to Robinhood. Let's start talking about what the plan is for tomorrow. I do have a little bit of capital. I'm not going to be making any thousands of dollars tomorrow, but hundreds of dollars is still on the table, and we're going to talk about it. Now that we are at Robinhood, let's take a look at my buying power. Robinhood still so generous, giving me $384,000 of buying power. and I have about $101,000 of cash available. I have about $103,000 of collateral basically being borrowed against my account. And tomorrow, Robinhood will let me borrow about $96,000 against my account. So why do I want to buy 100 shares of SPY instead of running a cash secured put? Because my collateral is going to be capped up to about $96,000 for running cash secured puts. So if I don't buy 100 shares of SPY, I wouldn't be able to run a covered call. And I don't want to leave money on the table by not running a covered call. So what am I going to do? I'm actually going to go to SPY right now, and we are going to buy 100 shares of, I didn't want to go to options. I just wanted to buy it. Let me go to SPY, trade now. I want to buy about 100 shares because I want to buy one contract's worth. What is the limit price right now? Trading at 681.45. So just guarantee me getting the shares. I don't care about 5 cents. So we'll just round it up to a nice 50. Make sure everything's right. 24-hour market. And we'll just good till close. Let's review the order and buy it. Looks like the order has been placed. So pretty much now we're just waiting for Robinhood to execute the order. And then I'll be the owner of 100 shares momentarily. Let's talk about what a covered call would look like. So I'm buying some around this 681.45. So let's take a look at those covered calls. So ideally, I'm going to run another daily because where I bought my shares is very competitive to where the market is at right now. And as is, if I were to run a covered call for tomorrow, man, this premium is kind of high. I think it's a little bit, might be a little bit off because when the market closed at 1 p.m. Pacific Standard Time, I think what's 4:30 or 4 p.m. Eastern Standard Time, the market closed at the 687, which was all the way up here. But then it dropped significantly, about $5 a share. And some of these options, they haven't updated since that significant drop. So tomorrow morning will be the real version of what you can make, but we can just play devil's advocate. Usually from how I trade my covered calls, I choose something between $1 to $3 away from my buying point, or if the market is my buying point. If I would generate about this much amount of premium, about like $429, I probably would choose a higher strike price like the 684, but we will see what the market gives. Yeah, so if I can get, I usually like to aim for about $100 of premium per contract. And if I can get $100 of premium and I can push out the expiration, not the expiration, but the strike price as far as possible, that's usually what I like to do. So yeah, for tomorrow, covered call, I'm going to choose something about around a premium of $100 or more. It really just depends, man. It really just depends. But I will also run a cash secured put on the SPY because I will have some collateral available. Let's head over to 681.42. These premiums for these cash secured puts seem a little bit more accurate. But if we look at the 687, this is where the market closed. So $3 away. Let's see what this would be. So the 685 would be about 0.38 delta. This would be a perfect delta for me, 0.26. It'd be 684. This is as if the market was at 687. Let me just make that abundantly clear. I would make about $90 of premium, but because these options are based off the close price of 687, it's not going to show for anything around this 681.42. So it's not really accurate, but I'm going to choose my normal delta of 0.25 to about 0.3. So there's about a 25 to 30% chance of that option executing. I'll lock in that premium, use up a little bit of collateral, and then life's good. So theoretically, tomorrow I should make like somewhere between $100 and $200. That's at least what I'm aiming for. That pretty much wraps up the video. Yeah, that's all I have for you guys. Stay locked in, stay harvesting, Matt out, and I'll see you in the next video tomorrow.